Good morning. Today's Monday, November 10th, 2014. This is Dan McElwee bringing you Ventura Wealth Management's weekly economic newsletter, The Profit Margin. We begin with our statistic of the week. Inconsistency in saving for retirement adds up over time and is costing retirees needed income. The average account loses $78,000 due to leakage, loans, hardship withdrawals, and early distributions, and $71,000 due to intermittent contributions. We now turn across the world for a global perspective. Europe recently completed a new round of stress tests on its financial institutions. Exams determined that 25 of the continent's banks had an inadequate capital to cope with a severe economic shock as of the end of 2013. Of the 25 institutions that failed, 9 were in Italy. In our chart of the week, we see that GDP expands. The third quarter saw the US economy expand 3.5%, chalking up a 2.6% year-over-year gain. The rise exceeded analyst expectations by a significant margin. And now for our weekly commentary. A little election euphoria set in as markets returned to all-time highs last week, with the S&P 500 hitting a record level of 2,032 and the Dow Jones Industrial Average climbing to 17,574. The S&P rose 0.77% as the Dow increased a little over 1%. Both indices are now solidly in the black for the year. The 10-year Treasury has been on a pullback as of late. Yields have risen to 2.32%. Still, they have fallen markedly on the year and been a surprisingly strong asset class in 2014. Higher volatility levels are not uncommon around elections. On average, the volatility index is 15% higher in the month before and the month of an election. Uncertain outcomes and future policies cause investors to weigh various outcomes, pushing volatility up. One clear mandate from last week's election: the electorate would like to see anything accomplished. That may allow both parties to find common ground on issues that are accommodative to economic growth. Read tax policy, infrastructure, immigration reform, energy policy, et al. The past week was not pleasant for international and emerging market positions. The MSCI EAFE index declined over 1%, and the MSCI Emerging Market Index dropped nearly 3%. The EAFE is down 3.4% year-to-date, and the emerging markets are barely printing a positive number. Slowed growth in China and recession fears in Europe weigh on equity valuations and are a principal concern. The global economy is not out of the woods. In the week ahead, Tuesday, the bond market will be closed in observance of Veterans Day. Wednesday, we'll have the Small Business Optimism Index. Thursday, jobless claims, JOLTS, and the Petroleum Status Report. And Friday seems to be the heaviest day in the news cycle, with retail sales, import-export prices, consumer sentiment, and business inventories. Thank you, and have a great week.